Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site, we have Chris Dearborn. He's the managing director on Nasdaq Market Intelligence Desk, and we're here for the midday update. Chris, definitely a different tone this week for sure.
Absolutely. It's definitely a risk-off environment today. Remember the saying, sell in May and go away? Well, this is definitely the case, what we've seen the last couple of weeks, and especially yesterday and today. Volume's a little bit better on the trading side. There's a little bit more chunkier macro news out there again. But again, you're still opening yourself up to headline risk coming between trade talks between China and the U.S. And that's still the main theme for this entire month. All
right, let's take a look at the S&P 500. And while the markets have been susceptible to U.S.-China trade war headlines,
correct,
it feels like it's a little bit bigger macro issues. It's global. It's poor economic data. It's questions around central bank policy. This is more than just relying on a tweet to move the market.
It really is. So what you're looking at is global slowing of the global economy, slowly across the board. And that's been a theme for a long time now. Europe's been seeing it, everyone else has been seeing it. So a lot of people putting their money to work in the US. What you've been seeing recently, and it's grabbing some attention, most notably, especially with the yield on the 10-year bond dropping to a 40-month low, is that you're looking at people buying bonds and selling stocks. But the volumes aren't really tremendous. Remember the December sell-off, we talked about that before. You can see it on the S&P chart here, that you were averaging 11 billion shares on the tape. This month, we've been averaging less than 6.5. Volume did start to pick up. Granted, Memorial Day weekend, the volumes are a little bit lighter, so you can push it around a little bit directionally. But what you're looking at is people are taking a flight to safety to get a little bit of a yield right now. Remember, Treasury yields work inversely to the price of the bond. And if the yield on Treasuries is going lower, it means people are buying bonds and selling stocks. So it's the people with discretionary income. What you're not seeing is capitulation. And people are holding on, waiting to see what's going to happen with the trade talks, because that's giving traders the glimmer of hope that they're looking for. And that probably won't happen until June 20th. So you're going to be at risk for any type of headline back and forth, either coming out of Beijing, like we saw last night, or coming out of Washington, D.C., which I'm sure there'll be something in the very near future.
All right, now what are some of the fresh levels that you're looking at in the S&P?
So very interesting. This is the S&P 500 chart. We keep going back to it. It's a good chart to look at. My colleague Brian again drew it up for our midday note again. Notice the yellow line going across. That is your 200-day moving average. It's sitting at 27.76. Why is this crucial? People are talking about an inverse head and shoulders pattern here, which could lead to a broader base sell-off. We're not actually buying into that. We want to wait and see. The actual index itself penetrated that lower level today on the back of Special Counsel Mueller's statements, but it's rebounded back up, and we're now back above the 27.76 level, around 27.80. Still down for the day, but what we're looking at on a closing basis, if it holds this level for the next couple of days, you could see a move back up. However, on the downside, Brian gives a couple of good ideas of where we could go right here. And we could push the 27,600 level, and that would be a capitulation moment. We don't see that just yet, but again, we have to wait and see.
All right, let's take a look at the 3-year weekly on crude oil. Certainly significant action in that as well.
Right, so again, a cause and effect type of item. You can see the significant move in oil coming back in late last year into this year. We have a nice rebound recently, but now you've broken down significantly. Slowing global demand, which we mentioned before, especially at China on the manufacturing side, is going to slump the price of oil. Even with saber rattling out of the Middle East and also the potential of OPEC cuts coming up. They have a meeting coming up very soon. The oil is still slipping here. You're looking at the pattern here. This could move to 52.50 unless something dramatically changes. Else, enjoy the cheap gas for the moment.
All right, we certainly will. Thank you so much, Chris, as always. And thank you for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.